Hey everybody, my name's Paul. I've been watching like a lot of YouTube videos lately about just different dividend investing strategies, various ways that people like to move their money around, and just different things that people like to do. And I got a YouTube channel. I figured I might post something. Sorry, this is being filmed on my phone, and I don't have no, I don't do fancy editing or anything like that. Um, So what you are looking at is a spreadsheet that I have. I'll scroll down there. The entire point of the spreadsheet is basically to give you a general idea of just basically how much I have in dividends coming in from bonds, stocks. We have broken down over here different things. This is 2019 remaining. This is based off of a tab I got going over here. So as you can see on the left hand side, I have all my different income streams, and on my right hand side, I have different income streams for 2020 also. Different taxes. I know people in the Northeast are going to really hate me when they see this. Come live in the South, guys. You would love it. Just give up everything else. Um, then we have my wife's bills. We have just different things. I'm a veteran, so I do get income, 40% from the VA, so that is included. So just kind of think about that there as I'm showing you this. Uh, just different strategies I have. So I've learned over the years. I've been investing on and off for a few years now. I'm very, very defensive, as anybody who's looking at this can tell you. Um, I prefer mostly tax-free income, and the reason for that is because very, very quickly, there's a reason why a lot of investors will tell you that you should do a 401k. If you're going to invest, just up your contribution and have your employer match it. And the reason why they say that is because professional investors will tell you taxes will very quickly, no matter your income bracket, start to eat into your income that you gain. So what that means is no matter how much you get, so like a lot of the dividend channels that I see, and I always ask them this, and I never really get too much feedback on it, is what is your tax strategy? Um, you know, and a lot of them will just flat out just say, I'm going to hold until hell freezes over, and that's kind of cool, but at a certain point, it is possible. So like if you're just a regular old Joe like me, um, if you're just a regular old Joe like me, and this is kind of, I live in the South, so these are kind of wages for the South. This is considered actually high for the South, especially after you take out just huge amounts for healthcare. And then this is my VA up here, but um, they, you know, if you earn too much in dividends, you start to lose actual benefits whenever it comes to taxes. So, like, if you start to make over, I believe, 3,000 in dividends, you can double check me on these numbers. But if you make over 3,000 in dividends, you can't get the child tax credit anymore. There's certain things, and that's taxable dividends. So the strategy that a lot of people have relies on like investing in, like, say 3M or Johnson and Johnson, Disney, that kind of thing, and then just kind of building up from there and getting up to 400,000 or whatever the goal is. And you have to get up some pretty extreme amounts just to get $2,000 a month. So a lot of people just really have trouble figuring out how they're going to get ahead in life, and how these strategies can work for them. So right now, I guess I should, since this is kind of my first video, I should explain kind of my life situation. So I do have an income from the VA. I do have my 2 checks here per month, and then sometimes you get that third check. And if you look over here on the right hand side, a lot of you are going to really hate me right now. So I have a normal phone bill. My water is billed once every 2 months, so it's about $56. Um, I have an energy bill and I have a gas bill. That's what Atmos is. And then I have these two loans right here from a place called Lending Club. And you might be asking yourself, what in the world? Where's your mortgage? Where's your rent? Um, so my life experience comes from the simple fact is that prior to the Great Recession, I was kind of like just basically spend it all, have a party, have that college life until one day I showed up at work and basically they handed me a pink slip and then I was about 1 month from being on the street. The only reason I wasn't homeless with a lot of people when I was living in Arizona is because I just happened to get my tax return the very next month, and then also George Bush sent me a $500 check as a stimulus. So that really shaped my views about mortgages, rents, that type of thing. And a lot of people will tell you this 4% rule, these types of things whenever it comes to renting. My flat out philosophy, as a millennial, by the way, 35-year-old millennial, how you doing? I'm the older ones, um, is to get a house. Uh, just get a house. Um, it is something you can pay off. It is something that you can normally sell at some type of price to get your money back. Just get a house. My house that I'm currently living in right now, I got it for $63,000 in Louisiana. It had damage to it. It was a fixer upper. I put $11,000 into it. My house is estimated at about $140,000 now. And I got this house in 2013. I put solar panels on it, by the way, in case you're wondering why my energy bill is generally around $100. And I paid off the solar panels with the tax credit from the government that I used to be able to get. Um, so I very quickly paid off my house. The VA actually gave me a little bit of back pay. And what I was normally doing prior to getting the money from the VA and whatnot is whenever I had a chance, I did a something called a biweekly payment, and what that does is it allows you to do just basically so you get this extra payment on your mortgage, and then also what I would do is whenever I would get my taxes, I would take $1,000 out of my taxes, for example, and call up my lender and say whoever the lender was because the loan gets passed around a lot, and I would say, hey, I want to put $1,000 towards my principal. And a lot of people will tell you, well, that's crazy. Why would you do that? It's a 30-year mortgage at 3%, or 4% in my case at the time. And my simple answer to them is once you get into a recession, the very first thing that you realize is if you don't have enough saved up to ride out that recession. These recessions can last a year, 2 years, 3 years before you get a check, and they hit different areas of the country very, very hard. Yeah, if you're in Texas right now and you're in the shale sector, you feel like you're in a recession right now because if you look at anybody's energy portfolio right now, the shale sector is kind of tapped out and they're having to do a lot of consolidation. They're taking some pain over there. And the very first thing you notice is that how in God's name am I going to pay my rent? So my priority was always just get the mortgage down as quick as possible. The same way that people try to tell you to like invest in dividends and do this FIRE strategy, financial independence, retire early. I tried to get my mortgage down as quick as humanly possible. So when I ended up getting back pay from the VA, that was a large amount. The very first thing I did, even though people were telling me, "Hey, your house is a 30-year mortgage, don't pay that off." The very first thing I did in 2016 is immediately paid off my mortgage. And I will tell you right now, and my mortgage was only about like $650, so it wasn't some extreme amount. So y'all can feel free to yell at me in the comment section about that. But it wasn't some extreme amount, but it was a lot, and it freed up a very large amount of money to do a lot of very fun things with. So what you're looking at is, and like I said, I am a very, very, very conservative investor. Um, but I'm also safe. So, for example, I, if I see a tax bill coming along that's going to take rates from 35% to 21%, these numbers were inverted in 2018. So these numbers right here were down here. So I was all in riding that 2018 wave. When I realized, or when you can see that China tariffs are coming, and when you see the effects of the tax bill, or just because tax bills don't really last that long, they have a very short term effect, especially if companies don't invest the money. If you see a bunch of companies doing $1 trillion worth of buybacks with $1.5 trillion of tax cuts, you can take a hint that they're not really doing good investments. They're just propping up their stock prices. And any professional will tell you this, and you can look around and it'll kind of be backed up what I just said there. So what I did is at the end of last year, in December, I was kind of still going into stocks, but then I kind of saw things starting to kind of slip a little. The Fed started talking about tightening. Everybody started losing their minds about, like, well, no, these zombie companies, the ones with large amounts of debts, were not going to be able to pay their stuff back. I very quickly shifted into municipal bonds. So when the market took a negative 12.5 or 12.9% hit last year, I took a negative 2%. And then I shifted a very large amount into munis up here. And then for all of 2019, as the Fed all of a sudden changed their tune that they were going to soften, everything was going to be, mid-cycle adjustment, I started to go back into stocks because that is code for stimulus. If you hear in that old saying, don't fight the Fed, well, it currently still works with the U.S. market. You know, so I started to go back into stocks. So I do have a few tabs I wanted to show you guys. So I have a data tab. I don't have this sheet linked anywhere. I'm sorry, but the sheet is very easy to create. You can basically see what it does. I manually track yearly, and I update this sheet literally every single day. There's a lot of people that will tell you don't look at your 401k every day. I look at my 401k every day. Um, and I just look around. So what I do is I have a few tabs. I have one that says CDs on it. Currently nothing's there, but I did have a bunch there because Capital One actually has some pretty nice CD rates on them. They still do, which is amazing. But I haven't had anything there because the return on the market is currently higher than the CDs I can get, and I don't want CDs that go out 5 years. Just because I might want to deploy that capital a little quicker. I have a tab that says historical. So what historical does is it kind of does what it says what it does. So my biggest goal in life was to have more equity than I have in debt, so that at any moment, if I ever get that pink slip again, like I did back when the Great Recession, I could very quickly, so whatever stocks I need, have a very large cushion, and then also just be able to pay my bills with my VA check. So what I do is I have leverage right now. This would be a form of leverage from Lending Club. They just happened to give me a rate that I thought was pretty fair. I think it was about 8%. So you high yield guys, you're making money off of me, whoever's buying my debt on the market. So my actual bills, these bills, core bills, that's what I'm down to. 4 bills per month adds up to, down there in the right hand corner, you might not be able to see, but it adds up to $262 a month is literally all my bills. These amounts up here is just leverage that I took out under my credit, which is in the 700 range. I believe high 700s because obviously I have no debt. But this amount up here is basically directly invested in the market. That 12, I believe that's up to about 13,000. It was actually 15,000 originally. That straight up invested in the market. So my goal, and if you'll also notice here, you don't see a car payment on here. It's not because I'm some hippie liberal, who only takes an Uber everywhere and eats my whatever guacamole. I actually have 2 cars. Both of them are paid off. One's a 2015 Prius, and then my wife's is a 2012 Kia something. But like I said, my goal has always been anything that I consider revolving debt or anything that's the credit cards love this type of debt. I hate this type of debt. Um, so anything, so if you're ever looking for a way to like, oh my God, I'm overwhelmed with debt. What in the world can I possibly do? What I do is I divide it into two columns or two forms here. I do debt that I really can't do anything about. I mean, you can cut back on the phone plan, and I can cut this down to one line, maybe cut that in half. Energy, I can just not run my heater, during winter. Water, I can use less water, but you can only get. I've gotten to the point on my energy bill that sometimes where I have the only thing that I'm being charged for is taxes, like $13 in taxes on my energy bill. Sometimes I've had good months with solar panels. But this type of debt, and this is effectively equivalent to credit card debt. Credit card debt, I find to be the worst type of debt. If you have credit card debt, for the love of God, go to Lending Club, go to any of these shadow bankers, because that's what Lending Club really is at this point. Type in your stuff, say you're doing debt consolidation, and they'll do a credit check on you, and they will give you, say, a 12% rate. That 12% rate, I guarantee you, is better than that 24% that you are being ripped off. Just do it. The quickest thing you can do right now is get rid of the cards. And you might say, Paul, get rid of the cards. I would say if you're the type of person that can't control yourself, close the card. For the love of God, close the card. If you think you can control yourself and you think you can kind of get on a good path, then do what I did. I have these two cards that are still open that used to have balances on them, by the way, that just have them open. They're there. There you go. They're just there. So let's see a few more things about me. So it's just kind of you can see my dividends jump around a lot. This is for anybody that's reading this very quickly. You might be, oh my God, you jumped from 38,000 down to 26,000. Now you're back up to 29,000. This was that car payment for my Prius, by the way. Get rid of that. I did that in August, actually. Right in August when I saw the market tanking, because I've been investing, but apparently I haven't been investing for long enough to know. Because if you know anything about general idea about how the market's supposed to work, the way the market works is basically they absorb debt. And you have to have somebody that wants to buy that debt. And when you don't have somebody that wants to buy that debt, normally the rate will go up. So when I saw $1 trillion worth of debt coming, I knew they were about to issue. There was a bunch of articles saying $300 billion is about to hit the market in August. I knew the market was about to tank because the yield curve was inverting. The people on the short end of the curve, the 2-year, wanted way more for that. You want us to buy your debt, you better give us a yield. You want us to get out of the high yield market, you want us to buy your debt. And Steve Mnuchin was issuing all that debt on the short end. And the people who buy that debt were demanding, you better give up some, some profit here. We want these rates to be higher. And they call those guys they had a name for them in the 80s that you always hear, the bond vigilantes. But, and they demand higher yields. Well, in this case, it wasn't happening. So the Fed, which I did not think, they came in and basically rescued the market, and they started doing QE, and they don't want to call it QE, but they're buying treasuries. And so my portfolio would normally be very heavily into stocks, except I know that once the Fed stops, the market is going to start to go the other direction because the earnings are not high enough to justify the valuation. So the valuations are just basically how much profit you think a company is going to make over a certain period of time. You can look it up on Investopedia or look at the other billion YouTube channels that kind of go into more detail. So this is my portfolio. So I am not like a lot of YouTube dividend investors. So feel free to yell at me in the comment section. Um, they will buy and hold until hell freezes over. They will only sell if a company cuts a dividend. My philosophy, and everybody will tell you something different. I've seen some YouTube investors with the people that actually show their portfolios. By the way, thank you, Joseph Carlson. I take a lot of inspiration from you. Um, I I cannot hold for the amount of times that they hold for. I went through 2008, and I know very quickly how fast a portfolio can turn on you. And if you want to know how quick a portfolio can turn on you, so here's Johnson and Johnson, for example. What I like to do is I like to take this line and I like to go back to December of 2018. December of 2018 was the pivot point for this market. And also prior to Trump's election, if you go prior to Trump's election, you can see some things were starting to get pretty bad. Back here in 2016, or actually further back, sorry. This market was going in a certain direction. And as soon as Trump got elected, tax breaks and all that came on the table to support these valuations, and we didn't. I personally think we would have went into a recession right around here. It was not looking good at the end of 2016. The Fed was talking about raising rates. You had the taper tantrum. Um, the tax cuts did give this market kind of a boost, but I believe it was short term. So what I like to do whenever I'm evaluating pretty much anything is I like to go back to December of 2018 for that. You want to know how fast and how bad it can get and how quick it can get and how, just how brutal something can get. You know, Johnson and Johnson was trading at $145 and then dropped like a brick to 127. So don't judge me for liking the lock-in profits. The same way that somebody says you don't officially lose money on a stock until you actually sell. Well, you don't officially make gains until you sell either. Now, if you plan on holding from now and riding out everything until you're 59 and a half or whatever the number is to not take a tax hit, feel free. But some people I've seen have an insane amount of money just sitting in this total unrealized gain part right here that would make you cry. And what I like to do, so I like to reinvest my dividends for one. But what I also like to do is I like to reinvest my capital gains. So some people will say, well, look, I made $100 via dividends. Well, that's cool. I made that today and I'm just selling some Disney stock. you know, Professional investors will do put calls, option calls. I got in an argument with one guy over Disney calls, and he's like, well, why don't you just buy Disney options if you're so sure that it's going to go up? Um, you know, I'm just not an sophisticated investor. I just do buy a stock. If I see it go up by 10% in less than a month, you know. These are just my philosophies, and I guess everybody's got to be different. It's worked for me so far. It's worked really well for me so far. The only ones I don't buy and sell, and I like to actually hold. So what I like to do is I basically like to own municipal bonds to offset capital gains taxes. And you might be asking, what in the world is going on there? So whenever you buy or you sell a stock for higher than what you bought it for, you're going to take this little gain up here is going to get taxed. That is going to get taxed. For me, I believe it's 12%. It might actually be 0% on some of these. If you hold it for long term, which means longer than a year, it's actually a lower tax rate. Um, I've gotten into the market towards the end of this bull run. Like I said, I just got my house paid off. I was really, really focused on debt this whole time. Uh, so I've gotten into the market. Um, and if you kind of want to see where I'm at, I believe here's my little performance guide. That's my performance over the year. And you might be like, Paul, you suck. You're not doing anything compared to compared to the Dow Jones Industrial Average. The Dow Jones Industrial Average at 20.61, and then if you throw in the this is E-Trade by the way, and if you throw in the S&P, it is up 26%. Paul, you suck. You are horrible. What you need to remember is that this goes for 2019. And like I said, I got into the market very late, so I didn't really start playing around in the market until last year, really, to be honest with you. I really didn't start because, like I said, I was really, really heavily. And then what I would do is I would invest money in the market. Once I made a little bit, I would pull it out and then I would pay off debt. So I really got heavy into the market towards the end of last year and towards this year, kind of like Joseph Carlson did. We kind of haven't been in the market very long, but I've been on and off in the market for 10 years, just not with very large amounts. And then I didn't really get in the mindset that I wanted to get into the market because I really thought it was always something so horribly complicated. Um, so, there's a lot of people on YouTube that are much more sophisticated and have been in it, and they're very wise. And I've looked at a lot of them. I wish they would show their portfolios. That would be nice, guys. So that's where I'm at for the year so far, 12.94%. I'm very happy about that. Um, and E-Trade actually breaks this down for you, kind of gives you a general idea. So what you'll hear, it's kind of a funny thing that I hear a lot of investors say, and they will say year to date. That means from January 1st until now, the market is up 26%. They don't say year over year because then that would force them to include that December of 2018. And then a lot of people would be like, well, you really weren't up as much as you thought you were. This market has come roaring back thanks to the Fed. December was looking pretty nasty until the Fed really got involved. Um, so this is just kind of my investment strategy. Here's my estimated income from different month over month. A lot of people theirs looks different. So right now I'm at 950. My dividend number actually shifts around a lot because I do move my money around. And like I said, if I see I'm up 15% on Disney in 1 month, I am blocking in those gains. I am going to lock in those gains and I am going to move that money to a different part of the market that I think has been underperforming. A lot of investors will do that with their dividends. They will get their dividends and then selectively reinvest those dividends into the weaker parts of their portfolio. That works, but I find it to be slow. And that's the only reason I don't like that. I like to take the capital gains and reinvest those. And I know I'm taking a tax hit every time I do that, but so there's a way to filter this down. So what I wanted to show you guys is, so you see that number right there says 950.47. Okay. If I was 100% in the market, that's how much I would be taxed. But because I keep a very large amount of money into municipal bonds at all points in time, this number right here, it says mutual funds. Mutual funds for me basically means munis, municipal bonds. So what I got into the market loving, and trust me, I just love them. I've actually been waiting for them to come back down, but ever since the tax bill, you have a lot of people in the north that actually keep a very large amount. As you can see, my municipal bonds, 7%. I threw a very large amount of money into the municipal bond, thinking that 2019 wasn't going to be good. And then once I saw that the Fed was going in the opposite direction, I went back into the market, and I've been in and out of it the whole time. So I've been waiting for municipal bonds to come down. They have not come back down. They have gone up, and then they have stayed up. and they have been bouncing 1 or 2 cents from this amount. And I looked at previous prior recessions and after the recessions to kind of see, okay, when in God's name can I get my beautiful municipal bonds back for the prices I was getting them prior to 2019? And I'm going to have to wait for a recession because there is a very large amount of money hanging out in municipal bonds right now. Um, so I guess that's a good introduction. I'll update you guys. As you can see, um, my normal, all the green is good. So I keep 2 columns. One measures how much I've done in between, and as you can see, these little numbers up here, the ones in yellow, these are what I like to call life events because I am a veteran, so I am kind of messed up. So I get lots of surgeries. So whenever I have a surgery, you can insert comments on spreadsheets. Did you guys know that? But because I'm not going to remember all this. So if I make large movements, like I buy a CD or something like that, or if I take my tax return and I divvy it up, for example, right here, different loans, different things of ways I've moved my money around. I like to, just put little notes just to let me know why in the like what in the world is going on. So what I'll do is I'll try to keep you guys updated. I don't know if my future videos will be as long, but I guess this is kind of an introductory video, so I guess you can get a general idea of what's going on. So if you have any questions, if you think I'm an idiot, feel free to tell me in the YouTube comments. I don't feel like I'm an idiot because I'm up positive. I don't have a risky portfolio at all. I really don't have a risky portfolio at all. Uh, I really don't. But I welcome any feedback whatsoever. Like I said, I watch multiple YouTube channels, just multiple ones, and I like to see how everybody's kind of doing their thing. There's one guy named PPCian, CIAN. He talks about his stuff all the time. I wish he showed me his portfolio on screen and then like kind of went through it. Joseph Carlson is a really good one. He has that IT tech money coming in, so he's able to swell his portfolio a lot faster than than an analyst in Louisiana can. He's a really funny. He really goes into detail about different things. He does educational content, and I'm hoping maybe I can post 1 or 2 of these videos just to kind of let you guys know what I think about just different things. Let me know if you have any questions. If you don't watch it, if you hate me, thumbs down, thumbs up. You don't got to subscribe. I really don't care. Um, but I'll try and give you just a general, and I'm hoping that maybe I had a different perspective into the conversation that you see on YouTube. Because I've watched a lot of channels and I just don't see them covering like tax advantage, these different tax strategies that you can take to something. Because if you take their advice on some of these as a regular, normal, rather average working Joe, probably making more than me or making less than me, you could find yourself all of a sudden tax time trying to get some stuff, trying to claim the tax child credit, and all of a sudden they're saying, no, you can't claim that. You did this, or if you're trying to qualify for disability Medicaid in your state, especially if you have a kid with disability, all of a sudden, nope, sorry, you made too much in the market. You know, I'm hoping that maybe I might bring something to the debate. You can compare my portfolio. If you think you can do better, go for it, guys. Hey, look, I welcome any advice. Like I said, I move money around a lot. So as you can tell from this page, I keep a bonds, a stocks, and a 401k. And this helps me to get a year over year of kind of where my money is, what it's doing, and how I'm doing. So let me know how you think. And y'all have a nice day. Thank you.